Welcome. Thanks for joining this discussion arranged by the folks at Pro Tax Accountant. We're going to tackle a question that so many of us think about. Can you actually loan money to a family member in the UK without getting tangled up with the tax man? It feels like a simple act of kindness, but it can have some seriously surprising financial strings attached. So let's dive in and get you the clear answers you're looking for.
All right, let's just get straight to the point. You want to help your kid get on the property ladder, maybe help your sibling get their new business in London off the ground. It's a great thing to do. You transfer the cash and then this little nagging voice pops into your head. Wait a second. Does HMRC need to know about this? It's such an important question. And believe me, the answer isn't a simple yes or no.
So, the good news is yes, you absolutely can loan money to your family tax-free. The loan itself isn't a taxable event. But, and honestly this is a massive but, it all comes down to how you set it up. HMRC has its own rulebook, and if you're not careful, what you meant as a simple family favor could turn into a real headache with unexpected tax bills.
So let's talk about those hidden tax traps. A family loan always starts from a good place, right? But if you don't know the rules, you could accidentally wade into issues with income tax or, and this is the big one, inheritance tax. It really all boils down to one key distinction that HMRC cares about more than anything else. And here it is, the absolute core of the issue. Is it a loan or is it a gift? See, with a loan, there's a clear understanding that the money will be paid back. It's still your money, technically, just on loan. But a gift? Well, that's giving money away with no strings attached. This one difference is literally everything because it decides which tax rules come into play. So here's the bottom line. Your single biggest risk is HMRC looking at your casual handshake agreement and saying, that doesn't look like a loan to us. That looks like a gift you're trying to disguise. If there are no repayment terms, no records, nothing written down, it starts to look an awful lot like a gift. And that's exactly when the tax complications can kick in. Stay with me, the next part explains precisely why this is such a big deal. Okay, let's get into the nitty-gritty. We're going to break down the two main taxes you've got to have on your radar here. Income tax, which is all about any interest you might charge, and inheritance tax, which can pop up if you decide to forgive the loan down the line.
Now check this out. It's kind of funny how one simple choice, to charge interest or not, completely changes the game. If you make it an interest-free loan, great, no income tax to worry about for you. But if you charge even a little bit of interest, that interest counts as taxable income. But here's the twist. Charging that interest makes the whole thing look way more official to HMRC, making it a much stronger case for it being a genuine loan.
But here's a little bit of good news on that front. For the 2025 to 26 tax year, most of us have something called the Personal Savings Allowance. What does that mean? Well, if you're a basic rate taxpayer, you can earn up to £1,000 in interest from all sources, including these loans, before you pay a single penny in tax on it. If you're a higher rate taxpayer, that allowance is £500. And that leads us to this fantastic pro tip. Think about charging a really small, maybe even symbolic, rate of interest, like 1%. That small amount of interest, which will probably fall well within your tax-free allowance, creates a powerful piece of evidence. It shows there's a real, formal arrangement in place, making it so much harder for HMRC to ever argue it was a gift. It's such a simple move, but it adds a huge layer of protection. Okay, so let's fast forward a few years. Your family member is doing well, and you decide, you know what, I don't need that money back. You want to forgive the loan. It's a wonderful, generous thing to do. But in the eyes of the taxman, you've just flipped a switch. You've officially turned that loan into a gift. And that, my friends, takes us into the world of inheritance tax. The moment you forgive that debt, it gets a fancy official name from HMRC, a potentially exempt transfer, or a PET for short. It means the gift is potentially exempt from inheritance tax. But what's the catch? Well, that potential only becomes a sure thing if you, the person who gave the gift, live for a full 7 years after the day you forgave the loan. This timeline lays it out perfectly. So day 0 is when you say, don't worry about paying me back. If you were to pass away within those first 3 years, that gift gets pulled back into your state and could be hit with a 40% inheritance tax bill. Ouch. But between years 3 and 7, a handy rule called taper relief kicks in, so the tax rate slowly drops. And then, once you cross that magical 7-year line, poof, the gift is totally free and clear of inheritance tax. All right, we've talked a lot about the risks. Now for the good part, the solutions. It's one thing to know the rules, but we need to know how to play the game smartly.
So let's build a strategy for lending to family that protects your money and, just as importantly, your relationships. And I just love this piece of advice. Look, it can feel a bit formal, maybe even a little awkward, to put a document in front of a family member and ask them to sign it, but this quote is spot on. A simple written agreement isn't about distrust. It's about clarity. It's about making sure everyone is on the exact same page, and it prevents so much confusion later on.
So what does a tax-proof loan actually look like? Here are 4 super simple, actionable steps. First, decide about the interest. Are you going interest-free or with a small rate? Second, and this is the absolute non-negotiable part, you've got to draft a written agreement. It doesn't have to be a 50-page legal document, just clear. Third, for really large sums of money, you could consider securing the loan against an asset, like property. And fourth, keep a record of repayments. Simple bank transfers with a reference loan repayment create a perfect paper trail.
Let's just quickly recap those common slip-ups. The number 1 mistake? No written agreement. The fix? Just write one. It can be simple. The next one is totally forgetting about inheritance tax when you decide to forgive the loan. The solution there is to just be mindful and factor it into your long-term planning. And finally, not tracking repayments. The fix for that is so easy. Just use bank transfers and create that clear digital record.
Whew! We have covered a ton of ground, haven't we? From the difference between a loan and a gift all the way to that 7-year rule. So let's boil it all down to the absolute must-know points and give you a clear action plan.
If you only remember 3 things from our chat today, please make it these 3 golden rules. Number 1, document everything. I know I sound like a broken record, but that written agreement is your best friend. Number 2, understand the 7-year rule. The moment you forgive a loan, that clock starts ticking. And number 3, if you earn interest, just remember it has tax implications, so know what your personal savings allowance is.
So I'll leave you with this question to chew on. Think about any loans you have out there, or any you're planning to make. Are they set up properly? Are they structured to protect you from a nasty surprise tax bill and to protect everyone from any confusion down the road? It's really worth taking a quiet moment to think about that honestly.
And you know what? If you're not 100% sure, you really don't have to figure this all out by yourself. Getting it right from the very beginning is so much easier than trying to fix a mess later on. For real peace of mind, the smartest next step is to chat with a professional. The team at ProTax Accountant can help you get everything structured correctly and safely. They make it super easy to get in touch, too. You can ping them a message on WhatsApp or call them on 07985 68912. Or, if you'd rather, just fire off an email to info@protaxaccountant.co.uk. They're genuinely there to help you handle this with confidence.
And finally, if this was helpful, there is plenty more where this came from. Do yourself a favor and subscribe to the ProTax Accountant YouTube channel. It's packed with more clear, practical tax advice just like this. Thanks so much for your time today.